Hello, I'd like to welcome everyone to this webinar on Paycheck Protection Program. I will turn over controls to Judy Andrews and Bryan Krislock, where they will be able to unmute themselves and continue the conversation. All of you who are attendees, which will be everyone except for these three here, will not have video turned on at their end for them to see themselves, nor will they be able to talk into the mic. So you will need to use either the chat function at the very bottom here or the Q&A, and Judy and Bryan will clarify that for you. So Bryan and Judy, I will turn it over to you.
Good afternoon, everyone. Welcome to the Paycheck Protection Program loans in the CARES Act webinar. We're glad you all can make it and be with us, and we have quite the group of attendees. Right now we have over 95 people in the webinar as we speak, and we're hoping to address some of your questions and kind of go over this program. A few housekeeping items up front. As you'll see at the bottom of your webinar, there should be a button for both Q&A and chat. The chat's going to be used for technical purposes, so it won't be used for any questions. But if you have a question, feel free to submit it on the Q&A section, and we'll either address it when we get to that point, or we'll provide a written response. And you can see the question. You should be able to see the questions and the responses to those questions in that window. So with that, we'll go ahead and get started. And if any of you are having trouble hearing us, myself or Judy, just go ahead and post a comment in the chat so we know that you can hear us clearly as we move through this. So.
And I'm just going to interrupt you for a second. Carrie, there is someone in the chat room who can't hear us, so I'm hoping that you can check that out. Okay.
So Paycheck Protection Program, as we all know, in light of everything that's going on in the world, it's been a pretty big fiscal shock to both the economy and a lot of our churches and parishioners. One of the stimulus packages recently adopted by the US Congress was this Paycheck Protection Program. Typically, nonprofits are not eligible for what are known as SBA loans, and the Paycheck Protection Program is an exception to that. Uniquely among federal loan programs, it allows nonprofits such as churches to obtain funding from the federal government, including loans that are designed to help congregations, missions, and parishes maintain their payroll and keep people employed. The idea being that there'll be sufficient economic activity once the COVID-19 crisis passes to help restart the economy. So I'll go ahead and turn it over to Judy to kind of start walking through some of the details of the program.
Okay, and how do we change the page? Excellent, okay. So one of the most important parts of this loan program is that the loan itself is forgivable as long as you meet the conditions of the loan. So the first condition listed here is that there are requirements as to how you use the proceeds of the loan. It can be used to cover your payroll, interest on any loans that you have on the building or capital facilities, and of course rent if you make any rental payments, and utility costs over the 8-week period after the loan is made. There's also a condition that 75% of the loan proceeds that you receive must be used for payroll expenses rather than the other items that are permitted to be used as expenditures. And then your employee and compensation levels must be maintained throughout that I think through June 30th. in order to receive the forgiveness that's permitted under the loan program. You can, if you have already laid off people, you are certainly permitted to rehire those people and include them in the payroll that you pay with the loan proceeds.
So we had a question regarding a rector who's retiring in May, and whether that will void the replacement waiver provisions of the PPP. So I don't know, Judy, if you wanted to tackle that, or I can answer that.
I think if you replace that person, and I believe that you would be hiring an interim of some kind, then that would meet the requirements of the loan to have that person in place.
And one of the key points is on the first slide, and my apologies for kind of skipping ahead, we talked about, you'll see the details on the first slide, which is the amount of the loan, which is the 2.5 times your average monthly payroll. That is the total funding of the loan. The use of the loan proceeds is very specific. It's for payroll and related expenses. And then there's a calculation that is made at the end of the loan on how the loan proceeds are used, which basically converts the loan from a loan into a grant. And we'll kind of tackle some of those details. So if you have clergy persons who are retiring or someone who's retiring mid-loan, that may affect the portion of the loan that's converted to a grant, but it doesn't eliminate your eligibility for that loan. Okay. So just a brief overview. What we've determined is, in light of our polity and governance in the Diocese of Olympia, loans are going to be in two categories related for church organizations. The diocese is going to be doing a single combined application for the Office of the Bishop, the Refugee Resettlement Office, Camp Houston, St. Andrew's House, and diocesan programs that have employees, as well as missions and mission stations. And that's because, in essence, those entities are a single entity, the Diocese of Olympia. So we're working on a single combined application for all three of those groups. Parishes, however, are separately incorporated in our diocese, and separately, they have their own vestry and governance structures. So parishes are required to apply separately if they wish to apply for this loan.
And the reason for this is that there are affiliation rules that the SBA has in place. And so this is causing us to determine that missions are affiliated with the diocese because of our structure. Okay. So we've already sent out information to missions about the information that's going to be needed in order to do the combined loan with the diocese. And so we thought we'd spend a minute talking about what parishes will need in order to apply for this program. So the first thing is you need to immediately contact your bank and confirm that they are working with the SBA to administer the PPP loans. And it's really important to do this immediately if you haven't already done it, because banks have so many applications that some of them are already reaching their limits in terms of how many loans they can make under this program. And if by some chance your bank has reached its limit, then there are banks that are accepting loans from institutions that don't bank with them. And I think they're listed, Bryan, I said you think they were on a website somewhere, did you tell me?
There is an SBA website. We can send that out. That will let you look up any bank, but most lenders or most banks who do business lending, and most bank websites will have some kind of section that deals with business lending, are accepting applications for this program.
Great. And then several folks have asked us about who the diocese banks with. We bank with Umpqua Bank and with US Bank. And we're looking at making this loan through Umpqua Bank. So the second item we wanted to cover here is what documents are you going to need? You're going to need payroll information for the year 2019. You'll need your EIN, your tax identification number, your articles of incorporation, your bylaws, and then it's helpful to have some evidence of the payroll that you've made during 2019, and that can be through your 941s or 944s or through W-2s. In addition, the bank might ask for IRS tax exemption documents. Now, churches do not have to have a determination letter. You are exempt under Section 501c3 by being a church. But if they press you, we do have tax exemption documents from the greater church, which show that the diocese is part of the group exemption, and then you would be part of the group exemption. And both of us, Bryan and I, have copies of those, as does Ariane, the canon to the ordinary, and Barb Fox. So please email one of us and we'll be happy to send those to you if you need them. And then just one last reminder is please be sure you're using your parish EIN identification number, and please don't use the diocesan number. Another piece that you will need to have that we'll be talking about in more detail later is a copy of the resolution of the vestry that shows that the governing body, your vestry, has approved the loan. And someone just asked if we'll be sending the slides out after the meeting, and the answer is yes.
So Judy already mentioned the proof of non-profit status letters. So please let us know if you need copies of those.
And this slide, that slide that just went by, provided a little more description of what those letters are so that you can explain them to your bank, because they won't make any sense to a bank that isn't familiar with churches or with 501c3 organizations.
Okay.
Oh, and I'm next, sorry. Okay, so the next slide is really a description of how you're going to calculate the amount of loan that you're going to be asking for. And because it's based on your payroll costs, because that's really the primary purpose for this loan, is to ensure that nonprofit corporations can keep their employees during this really difficult, challenging financial period of time. So you'll need to aggregate your payroll costs, and that's described in more detail in the next slide for, and it says here the last 12 months, but really it's for 2019 for all of your employees whose principal place of reference is the United States. You're going to subtract from the compensation the amount of any compensation that's paid to an employee that's in excess of their annual salary of $100,000. So if they make $102,000, you'll take off the $2,000. You'll want to calculate from that number, steps 1 and step 2, the average monthly payroll costs by dividing that number by 12. And then you're going to multiply that average monthly payroll cost by 2.5. And then you're going to add, if you have applied for or plan to apply for the economic injury disaster loan, which is another loan that's available under the new legislation from Congress, then you'll need to follow step number 5 to get that number.
And I can add a little clarification. You may see articles that refer to nonprofits' eligibility to apply for an economic injury disaster loan, or EIDL. Those loans are available for churches and they are available for nonprofits, but there's a key difference. The Payroll Protection Program is essentially a loan that becomes a grant at the end of its term if it's used appropriately. The EIDL is an actual loan. So it's a 10-year loan. I believe the interest rate is 2.75%. And it comes with an initial up to $10,000 grant. And the underwriting process is a little different, but that $10,000 grant takes away from your Paycheck Protection grant. So you can't double dip into two programs. So the Paycheck Protection Program is the primary one the diocese is going after in terms of our own programs. And the reason why is because, we're looking at it as a short-term funding solution to help deal with some of the fallout from this, where the EIDL is a more long-term loan, an actual traditional loan, rather than the short-term kind of grant.
And I'm going to just go back for a moment because I mentioned that the documentation can include at some point back your 941s or your 944. It also could include the quarterly report that you print out from QuickBooks for the last quarter of 2019. And Bryan, we had a question about whether we should stop and answer questions now.
Sure.
So that probably makes sense. So we're just pausing for a moment to look at question.
So we've got a lot of questions
yeah,
on quarterly compensation. Well, I think we'll tackle that in a few moments in one section, because that is definitely a very relevant question for a lot of our congregations. There was a question about rent including leases such as copiers. If I'm recalling correctly, I believe it's rent relating to the actual building,
yes,
not
the actual building. Yeah. So no, so copier lease would not count.
Okay.
I believe that when the loan is made is from the date it's funded.
Mm-hmm.
Is that accurate?
I believe so. And to be clear, there's, in our apologies for a lot of uncertainty with some of these answers. What we found is in the last 2 weeks, it seems like every day the story is changing. The regulations on this did not come out until about Wednesday or Thursday of last week. Lenders have been working over the weekend to get their applications together. Some lenders have shut off applications. Other lenders are still processing them. And every other day, there's another letter coming out from the SBA, members of Congress, the federal government, relating details regarding this program. So unfortunately, with how quickly this has been rolled out by the federal government, we don't have a very clear sense of how this is going to play out in practice. So some of these answers, like when the loan is made, it's just unclear from the text. That's what we're presuming, but that answer could change.
And there's a lot of debate, I should also add, amongst chancellors with respect to some of these answers. So there are lots of questions that we still have. So, and one of the questions is about clergy salaries, since clergy are self-employed technically. However, we believe that clergy salaries, because if they're salaries, should be included in the compensation.
There was a question about giving the officers of the corporations personal information on the app, and will this impact their personal credit? It should not impact their personal credit. This is a business loan. One of the key features which has made this loan so popular is it doesn't require any kind of personal guarantee for members of the corporation, which in a traditional nonprofit would cause the leadership some concern. The only entity on the hook is going to be the parish or the diocese, whoever makes or signs a loan, not the individual vestry members or clergy members. And there is no requirement for any kind of security interest taken against the building, the assets of the congregation, or anything like that. What we're suspecting is one of the challenges we have is traditionally SBA loans are not funded to nonprofits or churches. This is a very unique circumstance. And a lot of the regulations that are in place are not designed to deal with a church organization. Traditionally, in a lot of SBA loans, the officers and the directors and the executives of the organization are required to give information about themselves so you can run a background check and ensure that there's no disqualifying basis for the loan. And that may be why the bank is asking for that information. There was a question, it looks like, for Judy about quarterly reports from QuickBooks and whether or not another program such as Church Windows would work for the payroll report.
I believe it would. Again, I think it's just a way to show the bank, because it's the bank that's collecting the information, that your payroll is what you've paid. That the amount you say you've paid is actually what you've paid in payroll.
Joyce had a question, are these first come, first serve? The answer is yes. There's a limited set of funding from the federal government. We've heard rumors, but like everything, it's unpredictable, that we don't know if the funding is going to be renewed. But as of right now, it's first come, first serve, and the funding level is set by the federal government, not individual banks. So it's a pool that the federal government has allocated towards these loans.
The total that's been allocated is $349 billion, but the thought is that will be actually used up. And I have heard from good sources that there are already discussions in Congress that there will be yet another stimulus bill, number 4, that will include some additional funds for this program. So there's a question about how much of the money has much of it gone? We don't really know. Everything is happening at the last minute. The only thing I do know is that one of the banks, Wells Fargo, has told one of the churches that they have reached their limit of $10 billion. So I believe that banks have been allocated certain amounts toward this program, and then they have a ceiling. So
I can clarify that. The Wells Fargo is a unique circumstance because of some penalties that Wells Fargo was under due to their past lending practices. So their asset allocation was much less compared to other financial institutions. But yes, like Umpqua as an example is pausing applications because of just the deluge of people who are applying for these.
So there's a question about the average payroll of 2019, a number being somewhat larger because of someone retiring in January that has not yet been replaced. However, it looks as though the church is searching for someone to fill that position. So my sense is if you have a good feeling that you will fill that position by June 30th, that you should go ahead and use the 2019 numbers.
And that raises a good point because you may qualify for a larger loan than you're actually qualifying to be forgiven, if that makes sense. So some churches may be in a situation where they may qualify for a larger loan, but the actual funds that they can use the loan for would be less given turnover and staffing. So that's something to keep in mind as you're doing this. You want to be looking because 75% of the proceeds of the loan have to be used on payroll. So if your payroll is not at that level, you may want to adjust how much you get funded in order to reflect an accurate use of the loan proceeds. Okay.
There's a question about a difference between laying off a staff member versus furloughing them in regards to PPP. And I think a furlough means that they are just leaving for some period of time and then they're back, then they would be back in as employees. And I think that this all relates to how much you request or how much you put in for your payroll amounts. And if you plan to bring those people back because of this loan, then you should include that person in your payroll number. We will not be discussing economic injury disaster loans in this particular webinar. We're just going to be focusing on the PPP loan program. Should we go back for a moment or to the
next slide?
Yeah. Or do you think, or are there other questions do you think we should answer?
Well, this was a big one because it ties into the clergy. It's what constitutes payroll costs. Under the SBA regulations, compensation to employees in the form of salary, wages, commissions, or similar bonuses are also included in this. Similar type compensation is considered a payroll cost. Cash tips are the equivalent. Payment out to employee for vacation, parental, family, medical, or sick leave. Payments for separation or dismissal. Group healthcare coverage, including insurance premiums and retirement. So this would also include pension payments and employer contributions to a 403B if the congregation is doing so, and then state and local taxes on the compensation of employee. There's been a lot of discussion over clergy housing allowance, both within the terms of, is it included, is it not? This comes back to that there's no clear guidance from the SBA on how clergy housing allowance is treated. It's our, Judy and I have talked about this quite a bit, and our take on it is that if the housing allowance comes in the form of a cash payment, to the clergy person, it would be included within this compensation section for the purposes of this loan. But if it's an in-kind benefit, it would not. And the reasoning comes back to how we have to calculate out the use of the loan proceeds. The idea being that this is supporting the liquidity and the kind of the cash flow of the congregation, rather than being some kind of grant just for the general operation. So it has to be attributed to the actual expenditure by the congregation on the back end. So,
Ready to move on?
Mhm.
So excluded. So there are certain expenses that are, or certain people that are excluded from your payroll costs. The first is if you have an employee whose principal place of residence is not within the United States, then their compensation should not be included. I think we've spoken before that if you have an individual employee whose salary is in excess of $100,000, you would take off the amount that is in excess. Federal employment taxes imposed or withheld between February 15th, 2020 and June 30th, 2020, including both the employees and the employer's share of FICA, although I think churches do not pay FICA, and any Railroad Retirement Act taxes and income taxes required to be withheld from employees are not counted. And if there are any qualified sick or family leave wages for which a credit is allowed under the Families First Act, which we will be talking about in Thursday's webinar, would also not be included. Okay.
Use of, and this comes back to what we were talking about earlier, is that there's a restriction on the use of the PPP loan proceeds. So the proceeds of this program can be used to cover payroll costs, which we addressed in the earlier slide, costs relating to the continuation of healthcare benefits. So that's your monthly insurance premiums for the 2-month period following the loan. Any sick leave, medical leave, family leave paid out, mortgage interest payments. So that's interest on your, if the congregation has a mortgage loan for its property, you can use these proceeds to pay for that. And interest payments on any other debt obligations that were incurred before February 15th, 2020, and other SBA loans. As a reminder that payroll cost portion, which is the payroll cost, the health insurance, and the sick leave, vacation leave, has to be 75% of the use of the loan proceeds. Utilities are also the other provision, utilities and rent.
Okay. So the current SBA form asks for information regarding applicant ownership, which, as we all know, is not applicable for nonprofits and churches. And so the suggestion is that for parishes, that you basically state that it's not applicable because there isn't any stock that's issued. And then you would use the same rubric where you would sign as an officer, but you're going to be sure and indicate that you're not an owner. I think that's all we need to say about that. I think that the SBA has gotten it for this application that you don't need to fill in those sections. If you are doing an idle loan, I think it's different because they do background checks.
And Judy, related to this slide, there was a couple of questions about who should sign the loan application on behalf of the parish.
So excellent question. We'll be talking in just a little bit about the Vestry Resolution that you need to have in place, showing that the governing body of the corporation has approved the incurrence of the loan. And in that Vestry Resolution, we have a template for you all. You'll be indicating who the signers are. So I would think that your signer could be the rector or the senior warden or a junior warden. So someone who's an officer and who typically has authority to sign documents of this nature. Which we're now going to talk about.
Which takes us to the next step is this loan will need to be approved by the vestry of the parish. You should have this, and the resolution will send out so you have the template to fill in the blanks. Basically, certifying that the vestry approves the application for the loan and authorizes whichever individual, whether it's the rector, senior warden, junior warden, or treasurer, to complete the application. Under Washington state law, a board of directors, which the vestry serves as the board of directors, can vote by email if all vestry members, that means everyone on the vestry has to vote, and everyone on the vestry has to vote yes. So if there's any objection, then the vestry would need to call a normal meeting of the vestry to meet and vote with a quorum. But if you need to obtain unanimous consent by email, you can do so if everyone votes and everyone votes yes.
And you can have a meeting by conference call, and all you need for a conference call is a quorum, so it would be a majority of the vestry members.
And that's the default rules under Washington. So even if your bylaws don't say anything, that's what Washington state law allows for. And then we have the template, as Judy mentioned, and we'll get you another copy if you have any issues with the one we send out. But look for that email and we'll get that out. And then, of course, Judy and myself are always available to answer questions.
Okay, so we have just a couple of helpful websites here in the materials, and then we'll finish answering questions. So if you need to find an SBA lender because your bank either isn't participating in the program or by some chance has already reached its ceiling, you can go on the website. The application is also on the SBA website, and there's a link there to the application. And then there are interim SBA rules, and there's the link to those rules. In addition, there are also responses to questions perhaps, or interim rules with respect to churches. And I think both Bryan and I have a copy of those, and we'd be happy to share them if any of you are interested in looking at those rules as well. And let's answer some questions.
So we had a question about L&I premiums included in payroll costs, and also FICA. So yes, L&I premiums would be included if it's a state tax, which L&I should qualify as. And then with respect to FICA, there's two components to FICA. There's the employee paid portion, which would be included in that employee's gross salary. So if an employee makes $1 and then the employee paid portion is 7.9 cents or so, that would be included in that $1. So you don't pull that out. It's just that $1 that the employer spends. There's then the employer paid tax portion of FICA. And the employer paid side would not be included in your payroll tax. That's just a tax credit, or that is going to be dealt with some of the Family and Sick Leave Act items, but it's not, that's the portion that's excluded from the payroll costs calculation.
There's a question about repeating the loan terms. And I'm not quite sure which terms.
So
yeah, go ahead.
Okay. So the PPP loan, if it's not forgiven, it converts to a loan with what's known as a 2-year term. So it's due in full within 2 years of the origination date or the funding date. And it's a 1% interest rate on that loan.
And you can prepay with no penalty.
Right. The economic disaster loan, which is the other loan, is that 10-year loan, which has a 2.75% interest rate for nonprofits. But that's the actual loan versus this program.
There's a question about the application form. There is a standard application form that comes from the SBA, and there's a link to it in the materials, which you will be receiving copies of, the slideshow. It is not too late to apply for an EIDL loan. If you, those are the special disaster loans. If you want to do that and talk to your bank to get all of the forms. Let's see, actually the PP, there was a question about when it needs to be done by. The loan application should be done as quickly as possible because there is a limited amount of funds that have been allocated to this program under the CARES Act. It's $349 billion, which sounds like a lot, but this is covering not only nonprofits and churches, but also for-profit small businesses. So there will be a very large demand for these funds. There is no requirement to show loss of income to qualify for the loan, but we really do recommend that if you aren't going to be in a cash crunch because of this disease emergency, the COVID emergency, that you don't need to apply, then there would be no reason to apply. The reason that you would be applying is because you see that there's a cash crunch coming because you haven't been receiving your pledges and you're concerned that you can't meet payroll. And the purpose of this loan is really to be able to retain employees so that people are not unemployed.
It's a question regarding whether or not, I'm sorry, the loan officers will understand the housing allowance block 14 as part of clergy pay if they ask for the W-2, W-3 info. We're hearing that a lot of banks are having some difficulty with churches and nonprofits just because they're not as familiar with some of the nuances dealing with them. So we can't guarantee that they will understand. It would just be important for you to communicate, whether it's in a separate letter explaining that or some kind of breakdown that shows that, that's part of the clergy person's compensation. There's a question regarding the salary cap include benefits and housing allowance for clergy or just salary when using the 100K rule. If you'd like to address that, Judy.
So this is what I think our latest, there's been a lot of conversation about this. I believe that the $100,000 cap would cover salary and housing allowance, but not benefits, other benefits like health insurance and pension. Is that accurate? I think that's what we've agreed.
Mm-hmm.
Yeah. So there's a question about having a new hire that's not a replacement in 2020. And I believe that you are but you don't have the new hire yet, unless you do have the new hire. If you have a new hire, I believe that there are special rules that allow you to look at a couple of months of 2020 for purposes of determining the amount to borrow instead of the 2019 payroll. But if you haven't hired that person yet, I'm not sure if you would include that person. I don't think you can include that person. You can certainly pay that person with loan proceeds to use up your 75%. But I don't think you can actually include that person in the request because it does need to be a payroll that you currently have or had in 2019.
So we had a question about the email from the bishop saying much of the allocated money is already gone, and whether there'll be money left for parishes who are just learning how to apply. To be honest, we don't know the answer to that. It's outside of the diocesan control. And as we talked about a little bit earlier, this is related to the federal funding of this program rather than anything within our control. So I can say that independent contractors are eligible for this loan, and they're not anticipating opening those applications up until this Friday. So small businesses and churches and nonprofits are the first out of the gate. But we'll know more in the coming days on how quickly the funds are getting used up and whether or not there will be an immediate replenishment of those funds from Congress.
There's a question about whether missions need to take any further action. Oh, I just lost the question. Do missions need to take any further action after submitting their survey information about payroll? And I think the answer is no, that will be what we need for submitting the application because it's coming from the diocese. But when you receive loan proceeds, we are setting up a system because we need to do really accurate record keeping because we'll need to show that we spent the appropriate 75% on payroll and that the other 25% was used appropriately as well. And so we're setting up a system that we will be telling all of the missions about to ensure that we have proper record keeping for the bank and the SBA at the end when we ask for forgiveness.
I had a question about several banks that they will only do a loan with them if you're a current customer. We have heard that. There are other banks, however, out there that will accept loans if you are not a current customer. So it would be a matter of going around to the various institutions and determining who would accept your application. I will say that on the SBA side, on the back end side, there's no restriction that you can only apply for one of these loans through your current bank. Any bank that funds SBA loans is authorized to give these out. It's only that bank's policy in terms of how they're dividing the labor and whether or not they're allowing new customers to apply for the loan.
I will say that I believe that if a bank will take you on and you currently do not have a bank account there, they will require that you get a bank account there. I suspect.
Yeah.
Bryan, I think you answered the question about contractors, independent contractors, like the janitor and the Sunday school teacher.
Yes, I can't remember if we specifically addressed it, but these loans, independent contractors are eligible for their own loans. You cannot pay an independent contractor through this program or include them within your loan programs because for tax purposes, this is one of the first times the federal government has opened these programs up for what are known as gig workers or 1099 employees. So those are treated separately for the purposes of this program and can apply for their own loan from the federal government under these programs.
And that's if they're true independent contractors, the question is contract employees, and I'm not quite sure if that means that they're just employees that work less than 40 hours a week, or if they're truly independent contractors. So if they're part-time employees, they certainly can be included. If they're truly independent contractors and you give them a 1099 at the end of the year, then they can't be included. That's our understanding.
And a good test is, for a lot of congregations, is do you give them a W-2 or do you give them a 1099? Even if they're part-time employees, absolutely, are treated the same as full-time, salary, wage, doesn't matter. It's only that distinction between that, whether it's a 1099 employee or a W-2, or I should say 1099 independent contractor or W-2 employee.
There's a question about FICA. Do you want to answer that, Bryan?
Sure.
Do you see that? It's from Catherine Chamberlain. Do we have to block out the employees' FICA taxes from our calculations for 2019, or is that included? It did seem clear. Go ahead.
The FICA should be, the FICA should be, that's a tax on the employee. So it's just like their federal, the employee's portion of the FICA is part of the employee's own personal taxes. So it's like their federal income tax or related tax. The component that the employer pays, which is that other percentage that's on top of. So if you pay an employee $1, the employer is going to have a tax on top of that of about 7.65 cents. The amount on top of that is what is not included in this loan application. The below line, the tax the employee pays, would be included. So yes, the employer's portion is not included in the cost of payroll.
There's a question about whether the Vestry Resolution is the same for missions as it is for parishes, and it's basically the same. You could certainly adjust it. It's set up to be a Vestry Resolution, but you could certainly change it. So instead of using the word vestry, you'd use Bishop's Committee. For purposes of the loan that's being made, missions don't have to do it for purposes of qualifying, but it's a really good idea that your Bishop's Committee vote on and agree to incur this loan for the mission. I just answered the question about whether missions need a resolution. No, but it probably makes sense. For purposes of making the loan, we don't need it because the Diocesan Board of Directors has already approved it and the loan is being incurred by the diocese. But since missions will be taking some portion of the proceeds, it's a really good idea for governance purposes to have your Bishop's Committee approve that incurrence of the loan. Just the portion for the mission.
There was a question about 1099 and it should be an independent contractor loans. And yes, they're basically treating 1099 employees as their own individual business. So if they meet the qualifications of the program, their loan should be forgiven as well. Okay.
And mission churches do not have to complete the loan application because the diocese is doing that. There was a question about whether you need to send the Vestry Resolution with the application. Well, you'll want to include it in the materials that the bank receives. So if the application is filed online, the bank will probably want to get from you the other documents that it may need, such as your bylaws and your articles of incorporation, and I assume that the Vestry Resolution would be one of those documents.
There's a question about loan forgiveness. Can it be forgiven even if you have the resources to pay? Yes, if the proceeds are used for the purposes intended, which is the forgiveness isn't the test isn't the financial condition of the parish or the mission. The test is whether or not the proceeds were used for the purposes intended by the loan, which is why this effectively becomes a grant to help support payroll and costs.
There is a question because the applicant, this is a mission who sent in their information to the diocese and they didn't know about L&I and assumed not to include it. Is that something that they should resend, including it? Brian, do you're
I think it would be good if you just want to email me, or go ahead and email me directly and I can do the adjustment, because as we're preparing the application, I'll just do the adjustment for that survey response. There's a question about concerning 2.5 times the payroll amount. Do you have to apply for all of that, or can we just apply for payroll? So the 2.5 is the forgivable amount is basically 8 weeks worth of payroll expenses plus additional. The 2.5 number is the maximum amount you are eligible for funding at the front end. So no, the answer is you don't have to apply for the maximum loan amount. That just determines the maximum cap of the loan for you. And then after that, so you can apply for a lesser amount if that's what you need to cover payroll for 8 weeks.
Someone asked about the recording of this, and I believe that Carrie is recording this and that it will be available after the webinar is finished.
There's a question about a bank. I emailed that nonprofit applications will not be available until Friday. That is based upon that bank's, as far as I understand, there's no restriction on some banks for nonprofit applications, and it may be dealing with that bank's underwriting requirements.
There's a question about how the risk is shared among the missions if the diocese and the aggregate of the missions doesn't achieve the 75% payroll spend down, but the individual mission does. Well, one of the reasons we're setting up an accounting system is to ensure that we're going to meet the 75% payroll expenditure across the board. I expect that it will be a reimbursement system so that all the loan proceeds will go into a diocesan bank account, and missions will be asked to send in documentation of their expenses, and then they'll be reimbursed so that the diocese can track all of the expenses to ensure that we have the records that we need in order to receive the forgiven amount.
There's a question about an on-site apartment as part of compensation. Is the fair rental value included? The program itself is unclear, but our opinion of that is that no, it's only cash compensation that would be included, whether that's categorized as a cash housing allowance or salary, wages, or bonuses. Couple of questions about the Vestry Resolution. We'll make that available immediately after this program and get that out to you.
So if anyone does want the model resolution, please email either Brian or I, because we don't have your email addresses. So please do.
There's a question about electronic signatories on the loan. Yes, I think all lenders are, the regulations allow for an electronic signature on the loan, and all as far as I know, I haven't heard of a lender that's requiring ink signature. So this can be submitted electronically. And we'll go ahead and put the contact information up there.
Right. What evidence is required to show that funds were used for payroll? And I would assume that it's the bank that's requiring this evidence, and that it would be, again, 941s, a printout of your from your accounting system showing your expenses. A financial report from QuickBooks or whatever your accounting system is. We don't, and I have to say, we really don't know. I imagine you should check with your bank and see if they know what they're going to be asking for.
There's a question from someone regarding the EIDL and if they can receive a $10,000 emergency grant within 3 days of the application. Yes, that is true. That's part of the EIDL loan. The comment is true. I'm sorry, I just disappeared. But basically that 10,000 comes out of the PPP loan. So it's kind of a question of if you're going to be applying for a loan in excess of the PPP loan to make that policy decision for the parish. Couple of questions. We've been informed by UMQA, which is the diocesan bank, that they will accept applications for new customers. I don't know about other banks. A lot of banks are prioritizing existing customers before new customers. You may have some luck with checking with any banks in the local town or city you're in. Sometimes those banking relationships are easier to build than some of the larger institutional lenders, which may have more restrictive policies for that.
We have a comment here that Washington Federal Bank has accepted a request to apply for a loan. So so that's another bank that apparently is taking non-customers.
There was a question about mission churches needing to complete the loan application, and the answer is no. The diocese is doing a single combined application for all mission congregations. So you just need to give us the information and then we'll apply on your behalf. The question about accidentally including amounts in excess of 100,000 on the loan application. You'll have to discuss that with your bank directly. I'm not sure how they're going to be handling the underwriting and funding process. So it may be a situation where there'll be a stage 2 and then you can correct that, or they'll catch it if they review the documentation themselves.
There was a question about whether missions need to submit employment information to the diocese, and the diocese has sent out a survey that it has requested all missions to respond to if they are interested in loan proceeds. I think even if they aren't, I think we're nonetheless needing that information in terms of number of employees. And so, yes, you need to respond to those surveys. And if you did not receive one, please call April at the diocese or email one of us, and we'll make sure you get that information.
So I had a question on the timeline for when the money will be allocated and when it must be used. It's 8 weeks for the payroll, 8 weeks after the loan is funded for payroll expenses. So when the money comes in is going to be within the purview of the bank when it goes through the underwriting process and when it gets funded. And then once it gets funded, the subsequent 8 weeks or what the funds must be used for is that payroll and those allowable expenses. We're trying to get the application in as soon as possible. We're moving as quickly as possible on this, but it's going to really depend upon a lot of factors that are outside of our control, which includes the backlog of applications that the banks received over the weekend, funding from the bank, funding from the federal government, and a lot of factors that we're really uncertain about. The idea is that we want and are encouraging parishes to apply as quickly as possible. We anticipate more funds will be coming if they run out. We've heard from the Chancellor to the PB, Presiding Bishop, and the Episcopal Public Policy Network that there'll be more funds coming, but the goal is get the application in so that way we have something to work with, and we're doing that on the diocesan side as well.
I think we're at 4 o'clock.
Okay.
All right. Thank you all for attending. If you have other questions, please do feel free to be in touch with either Bryan or me, and we'll be happy to respond as best we can. Thanks so much.
Thank you all.